We recently got news that the Fed is going to be ending quantitative tightening soon, which is awesome to hear. In this video, we're going to talk about what quantitative tightening is. We're going to talk about why the Fed is looking to move away from it and where they're moving towards, which is quantitative easing, aka money printing. We're also going to talk about what that's going to mean for assets like Bitcoin. Before we get started, please make sure to like the video and subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave me a little tip. Now let's get into it. So we got this announcement last Wednesday at the October Fed meeting, and I thought this was super bullish. We also got a rate cut. However, we saw asset prices dropping, which was interesting. The main reason that asset prices were dropping is because Jerome Powell, the chair of the Federal Reserve, basically insinuated that we might not get a rate cut in December. Who knows? We still might get one, but that's a little bit besides the point. The reason that the end of QT is so bullish is because what quantitative tightening is basically the Fed having a tighter monetary policy with the economy. So what the Fed does with quantitative tightening is they're selling assets, securities like long-term US Treasury bonds into the market, and they're taking money out of the market. They're taking liquidity out. So when they do that, it basically leads to less money being out there. And if there's less money out there, eventually things can start to get priced lower. Let's go ahead and take a look at a little chart of the Fed balance sheet, which basically shows the amount of assets that the Fed holds. And as you can see, around 2020, when we got hit with COVID, we saw the Fed balance sheet sky up higher, right? Because they bought all these long-term US Treasury bonds as the US had to issue a ton of debt. But around 2022, we saw the Fed start to move towards quantitative tightening. So they did quantitative easing, and they switched to quantitative tightening because of all that inflation that we saw in response to the COVID stimulus. And they've been doing this quantitative tightening for quite a while now, right? It's 2025, and we still haven't seen this balance sheet start to tick up higher. But we have started to see signs that there is less liquidity in the financial system, and this is kind of incentivizing the Fed to switch from quantitative tightening towards quantitative easing, which is where they're expanding their balance sheet. If you're not familiar with quantitative easing is basically the opposite of quantitative tightening. So with quantitative tightening, they're selling securities into the market and they're taking money out. With quantitative easing, what the Fed is doing is they're buying securities out of the market. So they're buying long-term US Treasury bonds, mortgage-backed securities, and they're pushing money into the market. So when they do this, this leads to liquidity rising and it leads to the money supply rising. And the question is, where do they get that money to buy these securities out of the market? They create it out of thin air. And this is what we like to call money printing, right? They just create these new monetary units and exchange them with those securities. So when we see the Fed switch to QE, it typically is very bullish. We remember back in 2020 when we saw all this QE, as you can see in this chart here, we saw asset prices rip, right? Everybody was expecting this big market crash because of COVID, but because of all the money printing, we saw stocks rip, we saw Bitcoin rip, we saw other cryptocurrencies rip, right? Everything ripped up higher. So this is why this is going to be bullish for asset prices this time around, right? If we see this balance sheet start to rise, that's going to lead to the money supply rising, and that's going to push up the prices for assets like Bitcoin. Now, why is the Fed ending QT and moving towards QE? To sum it up, liquidity is drying up in the financial system, and we're seeing multiple signs of this. And before I get into these signs that we're seeing, I do want to mention that where I got a lot of this information from is from the Informationist newsletter, which is written by James Lavish on Substack. He does a really good job of breaking down the macro environment, and I've read some really good articles recently talking about how liquidity is drying up and how the Fed really needs to switch to QE pretty soon here. So I definitely recommend checking out his newsletter. I'll put a link to it down below. Now, one sign that we're seeing that liquidity is pretty low in the financial system is that the reverse repo facility has basically been drained. So let's go ahead and take a look at a chart of the reverse repo facilities balance. If you're not familiar with the reverse repo facility, this is basically a Fed facility where banks and other financial institutions can park their extra cash and earn interest. So when we see a high balance in the reverse repo facility, it's signaling to us that these banks and these institutions have a lot of extra cash, right? They have liquidity, and there's enough liquidity in the financial system. When we don't see a high balance in the reverse repo facility like right now, it's signaling to us that liquidity is drying up and these banks don't have a lot of extra cash. So if we look at this chart, we could see around 2022, 2023, the balance for the reverse repo facility is around $2 trillion. And then over the past couple of years, we have seen the balance for the reverse repo facility fall down to basically zero. So the Fed is seeing this and they're realizing that, hey, maybe these banks are out of cash, right? They're not parking money here, and we need to add some more liquidity into the system. Another thing we're seeing is that bank reserves are getting to pretty low levels. If you're not familiar with bank reserves are basically just the cash that banks keep deposited at the Fed. So let's go ahead and take a look at a little chart of US bank reserves over the past couple of years here. As you can see, around 2021, we saw bank reserves were pretty high following COVID, above $4 trillion. And then around 2023, right when we had this regional banking crisis where we saw Silicon Valley Bank fail and First Republic Bank fail, we saw bank reserves go down to a critical level. And now if we look towards the end of this chart, we can see that bank reserves are starting to head down towards that same level that we hit in 2023. So this is signaling danger to the Fed. It's showing that the banks don't have a lot of cash, and it's telling the Fed that it may be time to switch to quantitative easing and push some more liquidity into the system and see if they can get these bank reserves back up. Another thing we're seeing is that the Fed is finding different ways to inject liquidity into the system without doing QE. One thing we've seen over the past couple of weeks is that these banks and these financial institutions are borrowing from the Fed through the Fed's standing repo facility. So if we look at this chart here, you can see towards the end that we have seen the Fed injecting money into the economy. Of course, this money gets paid back to the Fed, so it's not really leading to the money supply rising and liquidity rising in the long term, but they're lending these banks money overnight because these banks are short on liquidity, right? They're running into problems because they're short on cash. And to me, this is a precursor to quantitative easing. What we're seeing in this chart right here with the standing repo facility is telling me that the banks are in trouble. And if the Fed does not increase liquidity soon through quantitative easing, the Fed is going to run into problems that they don't want to deal with. And when we do see the Fed do QE, when they do create new monetary units and exchange them for securities like long-term US Treasury bonds and mortgage-backed securities, this is going to lead to the Bitcoin price soaking up that extra liquidity and going higher. Let's go ahead and take a look at a chart which compares the M2 money supply to the Bitcoin price. Typically, when the M2 money supply is going higher, we see Bitcoin go higher with it. Now, recently, we've seen a bit of a divergence with the Bitcoin price and the M2 money supply. But as you can see in this little visual, the M2 money supply is rising. If we get QE, it's going to rise a lot more, and eventually that's going to lead to Bitcoin rising with the money supply. Now, what happens if we don't see the Fed switch to QE soon? Let's say they end quantitative tightening on December 1st, like they announced, but they decide not to do QE initially. They decide not to expand their balance sheet. Well, if the Fed isn't careful, and if they don't add liquidity to the system soon, then we could run into a liquidity crisis, which could be bad for asset prices in the short term. If there isn't enough liquidity out there, we start to see debt collapse, and then people start selling off assets, and it can lead to a crash. But typically, when we do see a crash from a liquidity crisis, What happens? The Fed then comes in and does QE. They start printing money, and this leads to asset prices shooting up a lot higher in the long term. And we saw this in 2020 when we had the COVID crisis. Let's look at a couple of examples of liquidity crises that are comparable to the environment we're in right now. A very comparable situation was in 2019 when we had the year-end repo spike. In 2019, we were coming off a long period of quantitative tightening, similar to right now, and we also saw that bank reserves were very low, similar to right now also. Bank reserves were a little bit lower back then, but still a very similar situation. And what we saw is that the banking system started to get into big liquidity problems very fast. We saw overnight lending rates for banks spike up higher because banks weren't willing to lend out their liquidity, and this led to the Fed switching to quantitative easing very fast. So after this mini crisis that we saw that asset prices actually didn't fall too much because the Fed acted so quick and switched to QE. 1 month following the year-end repo spike, the S&P 500 was down around 0.3%, so basically flat, and Bitcoin was down around 12%. But 3 months following this year-end repo spike, we saw the S&P 500 up 9% and Bitcoin was up 60.5%. So once the Fed came in and did QE, added a bunch of liquidity to the system, we saw asset prices rip up higher, and that's what's going to happen if they do that now, right? If they switch to QE, we can expect Bitcoin to go up a lot, and we can expect the stock market to go up as well. Another crisis that is comparable to our current environment is the 2023 regional banking crisis that we saw a couple of years ago. Back in 2023, we saw two of the largest bank failures that we've ever seen in Silicon Valley Bank and First Republic Bank. And back in 2023, we saw that bank reserves were also low, as we saw in the visual earlier. And we saw that the Fed was in this quantitative tightening cycle, right? Where they were about a year in. And these two banks, like most banks, were heavily exposed to long-term US Treasury bonds. Let's go ahead and take a look at one last visual here, which shows the bank's unrealized losses on investment securities. And as you can see, since around 2021, this chart does not look good. The banks were sitting on big losses in 2023, and they're still sitting on them now. So I will not be surprised if we saw more bank failures, especially if the Fed does not come in and do QE soon. But looking back to 2023, when we saw the collapse of Silicon Valley Bank, we saw something very interesting. We saw Bitcoin actually rally in response to these banking collapses. So we got the Silicon Valley Bank collapse on March 10th, and from March 10th through the end of the month, Bitcoin went up 41%. And the reason that Bitcoin went up so much is because Bitcoin is an alternative to the banking system, right? You can hold your Bitcoin on your own without a bank. So as the banks were running into issues, it created a lot of Bitcoin demand as an alternative, right? With Bitcoin, you can be your own bank, which is pretty great. We saw the S&P 500 down 0.5% throughout the rest of the month, and gold was up 1.2%. So Bitcoin proved to be the best way to protect yourself from a banking collapse. And if we do see more banking failures, I think that Bitcoin is still the best way to protect yourself. You compare that with the fact that the Fed is going to come in and add liquidity if we run into banking issues. That could lead to a big spike in the Bitcoin price. So I actually think that banking issues are kind of good for Bitcoin. But let's say we get a big liquidity crisis and people need to sell off assets. You never know, right? People may sell Bitcoin, stocks, whatever they can in the short term in order to meet their financial obligations. But once the Fed responds to the crisis and does QE, we can expect asset prices to go up. And I think that if we do have a severe liquidity crisis, it's going to involve banking problems, which is going to make people look at Bitcoin as an alternative. To wrap it up here, we are seeing multiple signs that liquidity is running low in the financial system, and that's why the Fed announced that they're going to be ending quantitative tightening or tighter monetary policy, and that's why they're going to be moving towards quantitative easing, or as we like to call it, money printing. When the Fed does move towards quantitative easing, this is going to lead to asset prices moving higher. And I think that Bitcoin is going to move higher than the rest. Really, we need to stop looking at things in dollar terms because everything is going to rise in dollars as the money supply is rising faster and faster. We need to measure things in real terms and think about what's going up the most and think about things relative to other things, right? How much is Bitcoin going up relative to stocks or real estate or vice versa? So that's the way to look at it. I think the one question that we have is, when are we going to get QE? Could we see a crash before we get the pump if the Fed does not move to QE fast enough? So in the short term, things are always unpredictable, but we know that in the long term, we are going to see the money supply rise. And I think if you look a year out from now, we can expect Bitcoin to be a lot higher, and we can expect stocks and other assets to be higher in dollar terms as well. That's it for this one. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.